The world will not collapse with explosions. There will be no sirens, no dramatic countdown. It will happen quietly. One morning, markets will open late. Another day, withdrawals will be temporarily limited. Soon after, governments will reassure citizens that everything is under control. And that is how every monetary collapse has always begun. Because money does not die violently. It suffocates. For over half a century, humanity has lived inside the greatest financial illusion ever created. The belief that paper promises our wealth. Not gold, not silver, not land, not energy, but paper. And, later, digits on a screen. At no point in human history has so much global trade been supported by assets that do not physically exist. This documentary is not speculation. It is a reconstruction built from history, data, and patterns that repeat with ruthless consistency. Empires rise, currencies expand, trust decays, and money resets. Always. The birth of the paper illusion. For most of human history, money was tangible. Gold and silver were not chosen because they were shiny. They were chosen because they were scarce, durable, divisible, and impossible to counterfeit at scale. Ancient civilizations understood something modern societies have forgotten. Money must cost something to create. From the Roman denarius to Islamic dinars, from Chinese silver ingots to European gold coins, trade was anchored in physical reality. That changed in the 20th century. After World War II, the global economy was rebuilt on a fragile compromise. The United States dollar became the world's reserve currency, backed indirectly by gold. Other currencies were pegged to the dollar, and global trade began orbiting a single financial center. For a brief moment, the system worked. But in 1971, the anchor was quietly removed. The gold backing ended. Money became pure belief. From that moment on, currencies were no longer representations of value. They were instruments of policy. Governments could print without restraint. Debt could grow without consequence. And economic pain could be delayed but never erased. Debt, the invisible engine. Today's global economy does not run on productivity. It runs on debt. Governments borrow to survive. Corporations borrow to grow. Consumers borrow to exist. Debt is no longer a tool. It is the foundation. The numbers are staggering. Trillions in sovereign debt. Quadrillions in derivatives. Entire futures mortgaged for present stability. And yet, none of this debt can ever realistically be repaid. It is rolled over, refinanced, extended, until confidence breaks. History shows this pattern clearly. When debt grows faster than real economic output, currencies lose meaning. Inflation is not an accident. It is a mathematical certainty. And when inflation accelerates, people do what they have always done. They flee paper. Why digital money will not save the system? Many believe the future belongs to digital currencies, cashless societies, central bank digital currencies, blockchain-based systems. But technology does not fix trust. It only changes the interface. Digital money still represents a claim, not value itself. It can be frozen, tracked, deleted, reprogrammed, and most importantly, it depends entirely on functioning systems. Electricity, networks, political stability. History teaches a brutal lesson. When systems fracture, digital wealth evaporates. Not because it is hacked, but because it cannot be accessed. In moments of true crisis, what matters is not convenience. It is sovereignty, the silent return of gold and silver. While public attention remains fixated on stocks, crypto, and interest rates, something else is happening quietly. Central banks are buying gold. Not in headlines, not in press releases, but steadily. Nations that once mocked precious metals are accumulating them again. Why? Because gold is the asset of last resort. It carries no counterparty risk. It does not depend on trust. It does not default. Silver follows closely behind, not just as money, but as a strategic industrial metal. When currencies reset, gold does not need permission to exist. It simply remains. Trade after trust collapses. Global trade depends on settlement. When currencies lose credibility, trade slows. Then it fractures. History shows that during monetary resets, barter returns temporarily, but it never scales. What scales is universally accepted value. Gold and silver have filled that role across civilizations, separated by thousands of years and cultures that never met. Not because of nostalgia, because no alternative has survived collapse. The coming fracture. This is not a prediction of tomorrow. It is a trajectory. A system built on infinite expansion cannot survive finite reality. Currencies backed by nothing eventually return to nothing. The real question is not if paper money will fail. It is how orderly the transition will be, and who will be prepared. Because when trust disappears, laws lag behind reality. And in that gap, only tangible wealth moves freely. Part 1, Final Twist. The greatest misconception is believing this collapse will look like chaos. It will not. It will look like policy, emergency measures, temporary controls, digital solutions. Until one day, trade resumes, but only for those holding assets outside the system. Not cash, not crypto, only gold and silver. Every civilization that believed it had conquered money eventually discovered it had only postponed reality. No empire collapses because it lacks intelligence. They collapse because they confuse control with permanence. The modern world believes its financial systems are too advanced to fail. History disagrees, and history keeps receipts. Rome. The first warning humanity ignored. At the height of the Roman Empire, its currency was trusted across continents. The silver denarius paid soldiers, fueled trade, and stabilized society. Then the state discovered a temptation older than politics itself. Spend more without paying the cost. Silver content was quietly reduced. Coins looked the same. Value was not. At first, no one noticed. Then prices rose. Soldiers demanded higher pay. Merchants refused coins. Rome responded with force. Price controls. Punishment for hoarders. Blame placed on traders instead of policy. It did not work. Trade collapsed. Tax revenues evaporated. Trust died. By the time Rome realized the problem was the money itself, not the people, the system was beyond repair. Gold and silver disappeared from circulation. Those who held them survived. Those who trusted paper promises starved. China. Paper money's original failure. Centuries before the West, China invented paper currency. At first, it was brilliant, lightweight, convenient, efficient. But paper tempted rulers into excess. Each dynasty printed more to fund wars, palaces, and political stability. Inflation followed, then hyperinflation, then collapse. The cycle repeated so consistently that Chinese emperors eventually outlawed paper money entirely. The reason was simple. Paper always outlives discipline. Europe's repeating pattern. From France's assignats after the Revolution, to Weimar Germany's mark in the 1920s, to post-war Britain's pound decline. The script never changes. Governments promise paper is temporary. Citizens are told stability will return. Instead, savings are erased. In Weimar Germany, people burned banknotes for heat because it was cheaper than firewood. Those who owned gold or foreign hard assets rebuilt their lives. Those who trusted state guarantees were wiped out. The illusion of this time is different. Modern economists argue that history does not apply. They cite advanced markets, central banks, global coordination, technology. But none of these change the core equation. Money is trust, and trust is fragile. When money creation exceeds real value creation, collapse is not ideological. It is arithmetic. The dollar-centered world order. After World War II, a single currency sat at the center of global trade. The system functioned not because it was perfect, but because alternatives were weaker. But reserve currencies decay faster than local ones. Why? Because they are abused more. Military spending, global bailouts, endless deficits. Confidence erodes not overnight, but silently. Foreign nations notice first, then institutions, then citizens. The quiet signal most people miss. Currency collapse is not announced. It is signaled by capital controls, by emergency laws, by restrictions on withdrawals, by surveillance disguised as convenience. Every collapse follows the same psychological arc: denial, reassurance, blame, control, reset. And during resets, legal ownership becomes secondary to physical possession. Why trade does not wait for stability. When currencies fail, trade does not stop. It adapts. Essential goods still move. Energy still flows. Food still changes hands. But settlement changes. Merchants accept what survives transition. Not promises, not contracts, but assets recognized across borders. Gold does not need explanation. Silver does not require regulation. They are trusted because they have no issuer. The myth of government protection. Citizens assume the state will protect savings. History shows the opposite. States protect systems, not individuals. During monetary collapse, savings accounts are frozen. Withdrawals are rationed. Conversions are forced. Not because governments are evil, but because survival demands control. And control demands sacrifice, always from the public. The new face of an old trap. Today's world believes digital systems eliminate collapse. They do not. They accelerate it. A digital freeze happens instantly. No lines. No panic. Just denial. Access revoked. Balances intact, but unreachable. Digital money does not vanish. It becomes irrelevant. Every major reset in history looked chaotic from the outside. This one will not. It will look organized, responsible, necessary. That is what makes it more dangerous. The shift from crisis to design. Past collapses were reactions. This one is a strategy. Governments and institutions no longer deny that the system is broken. They admit it quietly. But instead of allowing collapse, they are redesigning the rules. Not to preserve money, but to preserve control. Why cash had to die first? Cash is anonymous. That is its crime. Paper money allows escape from surveillance, negative interest rates, and forced policies. So cash is being phased out under the language of safety. Anti-money laundering, tax compliance, crime prevention. But the real reason is simpler. Cash cannot be turned off. Digital money can. Central bank digital currencies. The illusion of progress. CBDCs are presented as innovation, instant settlement, lower costs, financial inclusion. But their real function is programmable compliance. Spending limits, expiration dates, geographic restrictions. This is not conspiracy. It is openly stated in policy papers. Money becomes a permission system, not a store of value. Why crypto will not replace fiat? Many believe cryptocurrencies are the escape. But escape systems that rely on infrastructure are not escapes. Crypto requires electricity, internet, legal tolerance, exchange access. In systemic crises, these disappear first. And when pressure rises, regulation follows. Crypto will survive as technology. It will fail as universal money. Because states do not surrender monetary sovereignty voluntarily. The weaponization of sanctions. Modern warfare is financial. Sanctions freeze reserves, cut trade routes, isolate economies. This revealed something critical. Even sovereign reserves are not sovereign. Foreign-held assets can be confiscated, frozen, rewritten. This was the moment many nations truly understood risk and began repositioning. The gold accumulation phase. Central banks do not speculate. They hedge survival, and their behavior is telling. Gold is being accumulated quietly, off-market, outside headlines. Why now? Because gold settles trade without trust. It does not require correspondent banks. It does not need approval. It bypasses sanctions. The fracturing world trade system. Globalization depended on trust. Trust in currency. Trust in settlement. Trust in rules. That trust is fading. Trade is fragmenting into blocks. Regional systems. Bilateral agreements. Commodity-backed settlements. This is not deglobalization. It is re-anchoring. Why silver is the forgotten trigger. Gold is for states. Silver is for society. Industrial demand. Energy systems. Medical technology. Silver shortages are structural. And when monetary demand returns, supply cannot respond quickly. This creates an asymmetric shock. Historically, silver becomes unobtainable before gold becomes unaffordable. The psychology of controlled collapse. The public will not be told the truth. They will be guided. Inflation blamed on supply chains. Controls framed as protection. Digital systems marketed as freedom. By the time behavior changes, ownership will already have shifted. The collapse will already be over. By the time most people realize it happened, there will be no announcement. No declaration that paper money is finished. No headline saying digital systems have failed. Instead, there will be a new normal, and those who do not fit inside it will discover that survival and participation are two very different things. The world after paper. In the post-reset world, money still exists, but it no longer belongs to everyone. Digital systems will dominate daily life. Wages will be paid digitally. Benefits distributed digitally. Taxes collected digitally. For most people, life will continue. But trade, real trade, will be restricted. Not by force. By design. 2 economies, 1 planet. The future will not be equal. It will be divided. On one side, the permission economy, where money works only if behavior aligns with policy. Spending monitored. Access conditional. Compliance rewarded. On the other side, the settlement economy, where trade happens outside centralized systems. Energy, commodities, strategic goods. This economy will not be advertised. It will not be available to everyone. And it will not use paper. Why gold becomes the final passport. In this world, gold is not nostalgia. It is infrastructure. Gold settles balances between states, between corporations, between power centers. It moves quietly, not in wallets, but in vaults, ships, and bilateral agreements. Gold does not ask permission. That is why it is tolerated, but never promoted. Silver, the gatekeeper metal. Silver plays a different role. It bridges everyday trade and high-level settlement. When systems fracture, silver becomes money again. Not because people choose it, but because it is the only thing left that works at scale. History proves this repeatedly. When currencies fail, silver disappears first. Not because it is less valuable than gold, but because more people need it. Who will be locked out? The most shocking truth of the future is this. Poverty will not exclude people. Non-compliance will. People will still have money, digitally, but they will not be allowed to convert it freely. Withdrawals capped. Transfers delayed. Purchases restricted. Not as punishment, as risk management. The illusion of choice. Citizens will be told, this system is safer. This system is fairer. This system prevents collapse. And technically, they will be right. The system will be stable, because stability will be enforced. But stability is not freedom, and convenience is not sovereignty. Trade without visibility. Global trade will not disappear. It will become less visible. Bilateral deals. Commodity exchanges. Metal-settled contracts. Not reported on nightly news. Not accessible to the public. This is how trade has always survived collapse. Quietly. The final historical pattern. Every monetary collapse ends the same way. Those who trusted systems lost purchasing power. Those who trusted assets preserved optionality. Not wealth. Options. the option to move, the option to trade, the option to refuse. The most dangerous lie. The most dangerous lie of the modern age is this: money is just a tool. It is not. Money is power distribution, and power is never neutral. Final twist: the truth no one says out loud. The coming collapse is not designed to eliminate money. It is designed to eliminate independent trade. Paper money must die because it allows escape. Digital money must dominate because it allows control. Gold and silver will survive because they allow no one to decide who deserves to trade. That is why they are never taught, never encouraged, never explained. Because the future is not about who is rich. It is about who is allowed. In the next world, you will not be asked how much money you have. You will be asked what kind of money you are holding.